Hello everybody, my name is Christian Charlo. Welcome to your market report. Today we're Thursday, August 27, 2015. Today folks, I want to talk to you first of all about the follow-up on the last market report when the chronicle was that there was a bullish movement on the gold sector. Well, that movement it didn't perform well. Actually, it was a false signal, so I want to make a follow-up on that, and followed by the upward momentum that we had today on the markets, where a lot of sectors, especially the resources subsectors, surged. So I want to talk about some strategies, profit taking, and also exit strategies on the breakouts that we have today on those subsectors. So first of all, let's start with a follow-up. When I made the chronicle, it was on August 20th. Markets were, the SPY was around this area here. Finally, we had a major sell-off on the markets. What happened is continues to be China that worries investors. So this is why that we had this a massive sell-off on the SPY. Now, finally, we had a stabilization phase of 1 to 2 days, and now we have a pursuit of a rebound on the SPY. Now, the thing is, in the SPY needs to go above 199 points. And if ever it does go above 199 points, next target becomes 205, 204 points on the SPY. So there's still a probability that we might continue this rally, but right now we have a loss of the upward momentum on the SPY. Now, if we take a look here at the stocks that I've shown you last week, there was Hess, which was an analyst choice on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below. Hess was a short, but finally, when the markets rallied, we had to close that short position that reversed its downward trend. So this was also a false signal after the markets rallied. Now, if we take a look at the situation on the gold sector, when I talked about the chronicle, it was around here. Finally, gold was not able to reach its target of 112, 113. The gold sector made totally a false signal around August 20, and now it's back at its bottom of July. So really, all the bullish ETF I've talked to you about, such as Nugget, such as HGU, you shouldn't have got out, because what I said also last week is that if you're getting into those bullish ETF, make sure that if ever they lose all of today's gains, that you get out on them. So this was really important to do so. So HGU, for instance, is an example. Torex Gold that broke out is an example of a stock you should get rid of. Alistair Gold, which broke out, it's an example of a stock we should get rid of. New Gold as well. And same thing too for Fortuna Silver, which was totally a false signal. Now the thing is, can the gold sector stabilize at those levels? So far, we have not seen a wave of buyers coming on again. The risk on the gold sector is about if ever the Fed decides to raise interest rate. So far, Mr. Dudley that made a speech yesterday, which is the chairman of the Fed of New York, hasn't given us any clue. He said that the Fed will be data dependent to determine their rate hike decision. But right now, we cannot say that it's a bottom on the gold sector because buyers are not coming yet. And as you can see here with the stochastics, which is not towards the 30-40% range. Now, let's talk about the financial sector. I know I've talked to you about the financial sector also last week on August 20th. I said that the best way to trade the financial sector is, instead of going by shorting some stocks, such as Goldman Sachs, that was breaking down when the sector started the bearish cycle, I recommended to go with some bearish ETF, and a bearish ETF such as FAS really performed really well. So if you bought FAS on August 20th, it is definitely a great ETF where you should have made a lot of money, because the bearish cycle that we had in the financial sector definitely was really interesting. Now it's a moment to, if you have not taken some profit, to close that positions if you still have it. Because right now there's a risk that this bullish momentum that we have in the financial sector could continue to at least reach 444. So might as well take some profits right now or close your positions if you got in on August 20th instead of waiting for the ETF to go back and reach its support. So you will lose all of your gains if you do not close that positions here. So that was one of the best performer on the last chronicle. Now let's see here about the resources. So we talked about the resources sector on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below and Market Gurus. And if you take a look here at the coal sector, there are several stocks that are surging though, but on a lot of them it was mostly good for day trading. For instance, Arch Coal, we have recommended that stock in our day trading picks on marketgurus.tv. You had at least 2-3 entry points in that stock. It reached the top here, so that was a point where you should have taken some profit. I believe that right now, Arch Coal, with the fact that it's reaching its former support, that the bullish momentum is kind of over on a stock like that. So that was purely a day trading opportunity. Peabody Energy was our day trade of the day on our Facebook page. You had 2 entry points on that stock. We're just getting another wave of buyers coming in again on a stock like a BTU. So the thing is that if you bought BTU at opening, you were able to take some profit on that stock, well then I think you can hold on to your positions overnight if ever the rally continues on the market. But right now, to get in for swing trading when a stock is already surging by 48.36%, I think it's kind of too late. It's too risky for a stock like that. Tech Resources has been one of the few breakouts also in the mining sector. A clear breakout, yes indeed, but this is the thing you should favor. This is a strategy. First of all, when a stock is surging like Tech Resources, now look at the moving average. 10-day and 30-day moving average are actually some key indicators that you could use to determine what are the target on a stock like that. The good thing with Tech is that it went above its 10-day moving average, which confirms the strength of the upward momentum. The 10-day moving average, it's in red. Now, where is the 30-day moving average? It's in yellow here. It's at 954. So are you going to get in Tech right now at 890, knowing that at 954, 950, which corresponds to that former resistance there, that there's a risk that the stock might pause. The stock already surged by 20.92%. So for a gain of less than 5%, for a loss potential that is bigger than 5%, is it worth it? Not at all. I think on Tech Resources, it's kind of too late. If you had Market Gurus TV, of course, you would have known that this wasn't a clear breakout before, and you would have been able to make some money. But right now, I think it's kind of too late on a stock like that. For those of you who want to wait for a new signal, I think you should wait for the stock to stabilize around 944. Another stock in the steel sector, for instance, is Cliff Natural Resources. Pretty nice breakout on Cliff. I definitely love it. However, on Cliff, the good thing is that we're getting above the 50-day moving average. Now you see the next target becomes at 430. Now on Cliff, because the stock is already surging by 12.50%, to minimize my loss, I'll put my exit point at 340. So if ever we lose all of today's gains, I'll get out on Cliff Natural Resources instead of waiting for the stock to break 320. Now your profit taking opportunity is $4.19, 424 whenever it reaches its 100-day moving average in black. But definitely it's a nice signal on Cliff. But make sure you put your exit point around 340 on a stock like that. On the energy sector, oil is clearly getting out of its downward corridor. It's a first movement on oil. The fundamentals of the energy sector have not changed. Too much supply, not enough demand. So technically speaking, yes, it's good, but do not get caught and be in a buying spree on this first bullish momentum. I think you should wait for clearer confirmation, at least 1 or 2 days for this breakout to continue to confirm the strength of this momentum on the energy sector. And now if ever the momentum continues on oil, the energy sector on the Canadian side could reach 180. Those are the signals first that you should favor. As I said, favor a stock that at least can get out of its 10-day moving average. So for instance, Precision Drilling, we see that its 10-day moving average is around 577. The stock is able to maintain its gains, able to stay above its 100-day moving average towards 577, right? So which is a good thing. Now the target on that stock, it's 635. Now where would you get out? You could get out to at least around 540, 550 on a stock like that whenever it reverses its really short-term upward trend. So okay for Precision Drilling, but 540 exit point, 630 profit taking opportunity. A stock like Calfrac, you would have seen it is good, but the thing on Calfrac, I know there's a downward trend that's there around 517, but look at this in Calfrac Well Services, sorry, we have not gotten higher than its 10-day moving average, which is at 456. So that confirms that this short-term breakout is not appropriate. So it's a false breakout. Now, if we continue with another stock here, Canadian Natural Resources, clear breakout there. It's getting above its 10-day moving average, and you know that the target is around $30. Now, as for the exit point, a stock that is already surging by 8%, I would make my exit point towards $26.50, $26, if ever the stock loses all of today's gains, instead of waiting for the stock to go below 25, because that would be too much of a loss potential on a stock like that. So $26 exit point, $30 as a profit taking opportunity on a stock like CNQ. And why it is one of the best, it's because at least on today's breakout, it's able to stay above its 10-day moving average. So folks, this is the list. As I said, there's a chance that the rally could continue on the SPY towards 204 points. Gold stocks, false signals totally on the gold sector. Right now, we're waiting to see, can this be a bottom on the sector? But none of the positions I've shown you in the last market report paid off. If you bought some ETF on the financial sector, bearish ETF such as FAS that I've mentioned in the last market report, take some profit on that bearish ETF. It's important if you have not done so yet. And on the coal sector, well, most stocks so far have been active for day trading, Arch Coal or Peabody Energy. Tech Resources, I think it's kind of too late to get into a stock like that. On the steel sector, Cliff Natural Resources represents a great opportunity, but make sure you put your exit point at 340 if ever we lose all of today's gains. On the energy sector, do not be caught up by this first breakout. Be going gradually with your positions. PD is one of the best with a target of 635, but exit point 540 on the reversal of the short-term upward trend. Forget California Coal Services. Do not get trapped by a stock that is unable to go higher than its 10-day moving average. And on Canadian Natural Resources, one of the nicest breakouts, $30 as a profit-taking opportunity and as an exit point if ever we lose all of today's gains, so below $26 on a stock like CNQ. So folks, I wish you all a good trading. You can always chat with us on Facebook, Twitter. You can also make the free trial of marketgurus.tv just by clicking at the link below. This was Christian Charlo from marketgurus.tv, and I wish you all a good trading.